And I think we're live. Let's put on the camera for a brief second. Hello, everyone. Happy Easter. And I hope you had a great weekend with the family. Let's get into some market updates. Okay, so first of all, this did not happen. And I was pretty surprised by that. Well, mostly this chart over here, this Bitcoin 128 chart, and then also with this 512 chart above. It's not typical that you see this. So let's dive into what could have happened here. Just a word of warning. We spoke about this not so long ago. When I say that, I'm just trying to get my head into thinking mode again. We spoke about this, I think, last Thursday or Friday about the Easter weekend taking a bit of a breather. So when markets consolidate the way they do, for example, over here, then, okay, well, this didn't really work out, so I'm going to take that down, and then I'll show you what's really happening. Okay. When you get consolidation over a long period of time, what happens is that there is a delayed reaction, which then accumulates very quickly and happens, boom, all at once. So I call this the calm before the storm, and then the storm hits. Okay, that's because market structure requires certain energy points to happen at certain places within the market. And when there isn't, us basically the action take is to buy and sell during that period. When we get back into the swing of things, that's where it all goes down. All right. So I don't like these, mostly because of how poorly set the market structure becomes, as it's very distasteful. It's very messy and ranged. And what I prefer is to have longer transitions that are more predictable and easier to work with, right? Can't always have what you want. Easter's got to happen, but that's just my preference, of course. So where does that take us now? Well, a while ago, what I foresaw was a downtrend kicking off. So maybe let's just go over here. And to my surprise, no, wait, that's correct. And that's up again. Yeah, when this was going up here, to be honest with you, this is when I started up again on the 27th. It seemed a bit artificial and confusing because, as I would have said in the past, whilst you have this pretty strong push to the upside, what goes up must come down. And I expected it to go down, and it did, but then it kind of aggressively came back up again, which is quite surprising to me. And obviously, I don't try and interpret the markets. I work with it from a listening perspective. I rather pay attention to what it's trying to say, and from a passive position, I was just kind of sitting back and allowing it to build itself out. Now, this artificial extra move to the upside, I think, is what is catching people off guard. And it seems as if it's time for that to correct itself. All right. And perhaps this breather kind of calmed down this bullish behavior that's been, in my opinion, a bit artificial. So let's get back into what it looks like. Oh, wow. We're down to 66,000 already. That's that's quite a big drop, 72,000 to 66,000. All right. So let's get into why and what's happening. Before delete these tools, I also want to remind you that we're working with cycles. Okay, everything in the universe has cycles. Life has cycles. You get born and then you die, and everything in between. There's seasons, and autumn hits, or fall if you're in America, spring, summer, and so on. Like, everything starts and finishes within a point. So cycles are super, super, super relevant and super important to us. So when we work with the highs and lows within the cycle, each high and low has a preset position that works out divinely, and it's important that the market keeps its a good structure, because when the market gets a bit too chaotic, then the divinity of the market has to get itself back into how it should be looking, and it's a lot of work and it's a bit confusing for traders, and a lot of people complain. So a healthy market structure is super, super important to successful trading. And the more you work with the markets, the more you'll see it, especially for those who have bought my videos and have access to my custom tools that you guys can utilize. Again, simplicity for me is much better than complexity. There's so many guys out there who speak a big game and they can't back it up. So instead of being able to back it up with results, they throw a whole bunch of unnecessary tools onto the chart and use big forgiving words that you have to go to Google and try to get definitions of, and it's pretty irritating. So when I work with an oscillator, for example, it's clean cut. It provides the best results I've seen on any oscillator, and so on and so forth. So for the guys who are studying the material now and the guys who have worked with MTOPS for a while, you'll get to see that here's the start of the 512 cycle and here's the end of the 512 cycle. So where we are is kind of somewhere in between, right? Which means we're at the third high of the cycle, or turning point 5, depending on which way you want to look at it. It's basically the same thing, just a different name. All right, so what we're going to do here is remove the tools for that, because what this information has been building up towards is just merely the market structure trying to get across the board a bit. And how it did so in this instance was that it reshaped itself and is now going to decline. All right, so I think things are going to get bearish. I did say to those back here already, I think by the 9th of March, to sell to cash. It did go down. There was a little bit of this artificial pump. I didn't expect it to last long, but I think if you haven't sold to cash by now, or gotten out of your positions, another way of saying that, and locking in your profit, depending on where you got in, of course, then I would suggest just kind of, what's the word I'm looking for? Taking your profits, and in the literal sense of the word. Okay, so here's that pre-warning that the market's going to go down further. So again, if your account is getting lesser because it went from 72,000 to 66,000, then now is your second opportunity to kind of lock in the profit that's left for those who've been holding for a long period of time. If you want to hold until Bitcoin is $1 million, then that's fine. But I'm just speaking about the more frequent traders, the guys who like to lock in sequences of profits rather than just wait a few years and then lock in that profit. So if you are kind of day trading or swing trading, I would move your positions to dollars, hold those dollars, either short the market now, or if you only do spot trading, wait for it to find its next low, and then depending on if you counter trend trade, then only then get into your position. Okay, so let's move on to the market structure some more. Sorry for the longer video. We just got a bit to catch up on. All right, so for those who are kind of learning from this material each day, what we want to do here is get into the absolute high, and how we can do that visually. I mean, my eyes trained, I've done this for years, so I don't really need these extra steps. But if you're still training, you can put down a line. TradingView calls it the ray, and then just see which of the candles is the highest, because we're working with the top, and it works out to be this one here. For like the naked eye, it could be confusing because it could be somewhere there, it could be somewhere there, it could be this one. But the easiest way to simplify where the absolute high is, absolute low is just to drop a line, especially over here, for example, when they're all quite close together. And my naked eye said it was this one, but that's because it's been trained over time. So that's just a little bit of a tip and trick to make sure you got your absolute high, which is relevant to this strategy and to making profit on the markets, to be honest, because I think that this is the best strategy that exists. And so, yeah, that is what I recommend. Okay, so again, what we're looking for here is just the structure to set it up. We're looking at the previous high to the previous low, taking the scaling, bringing it across, lining it up with the current transition that we're working with. Then I'm going to take a cancel and then just scale it up. To help me, I'm just going to reverse this guy. Let's see where it intercepts. This is just for scaling purposes to ensure that we have the snuggest fit for price action to interact with when it comes to our support and resistance. Okay, so I'm just doing some quick visuals. All right, so we see this interaction there, some good interaction there and there and there. Kind of stops a little bit to, oh yeah, we haven't got the double rings. So if there was a double ring here, it'll probably stop at the right spot. Then it came into that area, dropped off from there, stopped there, climbed up. Maybe if we just kind of etch it across, let me just check before I do too much rescaling, whether or not it would have gone up between the line that sometimes happens between the different fan lines. This is for those who've been working with the strategy for a long while. You don't need to get this in depth. I just like to operate from a high place of accuracy. So all these extra little steps is just to ensure that we've got the best fit possible. And again, you don't always have to have best case scenario. You can have good enough, because when it comes to trading, you don't need to have absolute precision. It's more about when to get in, which is obviously outside of the kill zone, and then when to get out. And that all depends on the highest probability outcome. So we can get into setting up where the forecast will be up there. Let's get into some structure over here. I've got to be honest, like, again, when you run into consolidation periods as long as this one, and Easter weekend is obviously not easy on the markets because it's a long standing consolidation period due to everyone kind of with their families and not really in the office and such. But obviously with the 24/7 market, there still is some buying and selling happening, and not much. That ruins market structure. So this is absolutely horrible to work with, and therefore, for those reasons, I'm really grateful that we only have Easter once a year. Christmas is obviously another time where it's not so fun to work with on the markets, but it is also nice for both the markets and ourselves to have a bit of a break. So what happens now? All right, so in terms of some shapes, what we would look for is a double top, right? And then when we got the double top, we operate from the second one and then travel that one down. However, for a double top to be relevant, the prices need to be equal as to where it drops down from. And with my naked eye, well, it's kind of my trained naked eye. I can see that the second one didn't make it into the region where it was a higher high. So again, I left you guys last week with the word of caution to not trade over the weekend because of the lowered liquidity. But also I said that the price was going to beat this high because it looked as if we were still in an uptrend over here, which is no longer the case. And therefore expected that to form above there. So I gave a predicted area of around about this range. That's no longer the case. So if we take these tools away, we still have this naked price action. And it is very tempting to try make it your own by applying the tools in a convenient way, so it just looks better. But when you work with absolutes, and I've learned this from doing it the wrong way, so this is not like I did it perfectly from the beginning. I've tried to kind of force setups, but then eventually that just cost me in the end. So when you're setting up your markets, you want to work with absolutes. You want to work with what the market's telling you, not what you want for the market. Okay, it's a very, very big distinction between the two. A huge difference. And I hope that resonates with some of the intermediate traders who've been doing this for a while. Okay. So this is the high now. As much as I don't want it to be the high, that's the next high. Okay. That's the low. That's the high from market structure perspective. And then you'll see that it goes all the way into here with this ugly price action because of Easter weekend lowered liquidity. So let's set the high, and it's absolute. The second candle over there with my naked eye. Again, if you want to confirm, just take a line tool, they call it the horizontal ray, and make sure that it's touching the highest candle on that line. And again, because of market structure, because we're working with MTOPS, right, we're not going to, hold on a sec, 1, 2, 3, 4, let's get our end of cycle over here. We don't want to mislabel the highs and the lows because we got a full field to think about. We got a full market structure, high and low symphony that needs to unravel here. So if we mark the highs and lows too close together, then the rest of it's going to suffer because there are a limited amount of highs and lows per cycle. And again, if you want to learn more, if you don't know this information already, please reach out to me, buy the videos, and in your own time, just go through it and upskill yourself on these markets. And again, the strategy works everywhere. I just use Bitcoin because it's 24/7 price data, but you can use it on the Dow Jones, gold, oil, anything that has a market, anything that's a publicly traded entity, you are able to use, including obviously indices and such. All right, so what we're doing here is wrong. Okay, my bad. I got lost in talking. We've got to scale it correctly. Okay, I can't just put GAN tools wherever I want. All right, if I just do this freehand, that's idiotic. That's not how it should be done, and it's a lot of other guys who've actually got to the stage where they've learned about GAN, where they're actually understanding some of the tools, where they would just kind of make it fit. Those guys are just opening themselves up for losses. Like, you've got to use the tools correctly. It's the reason why they're so accurate, but they're only accurate if they're scaled correctly and done correctly. So I'm going to finish up now. And then I think on the post where I normally just send my market prediction, I'll send the area where it's going to most likely land up. And by the way, I'm just going to change the box color from yellow to green because it looks better on cell phone, as yellow is sometimes quite close to white and not easily visible. Okay, so let's finish this off real quick. Go to there and there. Reposition it. And again, for those who are learning the strategy and know the strategy, you'll know exactly why I'm doing it this way and how, and all the nuances and all the things not to get caught up with. Wow, this is interesting. So I'm going to not use the 0.5 this time. I'm going to use the 1. As much as I want to dial it back a little bit because it gets quite snug over here. Yeah, so it really holds nicely at all these areas, but I want to stay true to the strategy and I'll line up 1 with the kill zone over here and watch it unravel. Okay, so again, I'll put down the areas of